Thanks for clicking! The Toronto Regional Real Estate Board has released Toronto's real estate data for the month of August, showing sales and prices falling all across the board. Or, as Bloomberg puts it, sales tick higher.
To do whatever you tell me, drill sergeant?
Yeah, and it's not just Bloomberg. Yahoo says that sales went up, and the Globe and Mail says that sales declined. But, despite what is being pushed by the media, a closer look at the data, or even a passing look, reveals that the market picture is not so rosy. But fear not, says the TRREB, yesterday's interest rate cut could spur activity. Sorry, that was the headline from June. Here's the one from yesterday.
I photocopied it.
But still, even a broken clock is right twice a day, so let's take a look. So what I want to do today is go over Toronto's real estate data for the month of August, take a look at the predictions coming out of the TRREB, discuss the data and whether or not Toronto is likely to see an upsurge in activity on these rate cuts coming from the Bank of Canada. As we'll see today, Toronto's housing market is firmly in the hands of the buyer, and with inventory continuing to climb, it doesn't look like that will be changing anytime soon. We will obviously continue to track Toronto's market on this channel. Click like and subscribe if you want to get those updates. But for now, let's get into this data. Onto the data. First up, the benchmark price. The benchmark price, if you remember, that's the price of a home that represents the most popular set of features. And the benchmark fell in August. July's benchmark was sitting at $1,097,300, and that fell about $15,000 to $1,082,200. So the benchmark is down about $15,000 since last month, but down about $60,000 since this point in time last year.
We can't afford to wait.
And the average price fell as well, even more substantially. Toronto's average price in July was $1,106,600, and that fell about $32,000 to $1,074,420. So the average price is down about $32,000 since last month, and down about $8,000 since this point in time last year. And the median price fell as well. The median, if you'll remember, that's where half as many homes are sold over that price and half as many are sold under. The median in July was $950,000, and that fell to $925,000 in August. So we have a $25,000 drop in 1 month's time in the median price, which is also down, again, about $8,000 since this point in time in 2023. In the months of inventory measurement, the MOI continued to fall as well. That measurement looks at how long it would take for Toronto to completely run out of homes for sale if everyone just stopped selling their homes, and that was up from July's 3.2 to 3.3 in August. And finally, the sales to list price ratio, which measures by how much over or under asking a home sells. So if a home is listed for $100,000 and sells for $98,000, the SLPR would be 98. Toronto's SLPR in July was sitting at 99 and stayed at 99 in August. So, on average, homes are selling for 1% under their asking price. With that said, as we talked about before on this channel, take this measure with a grain of salt, as even the worst realtor in the world can underprice a home, throw it on the market in sight of bidding war, which will artificially skew this number upwards.
Commission accomplished.
So, we have the benchmark price down about $15,000, the average price down about $32,000, the median price down $25,000. We have more relative inventory on the market, and homes are still selling for under asking in Toronto. But the real story is the sales data, with so many having predicted that the Bank of Canada's rate cuts would spur an increase in demand in Toronto. It appears as though that was not the case, with sales coming in at 4,975, the lowest amount of sales in August that Toronto has seen for the past decade. And on this, I just want to briefly note that we really should be comparing year-over-year data when looking at the sales numbers, comparing August to August, apples to apples, despite the headlines, which are telling us about an increase in sales in the month-over-month data. We do want to try to compare the same month to the same month, as the Toronto market obviously behaves differently depending on the month. You wouldn't compare a December market to that of one in April, for obvious reasons.
I would.
But here is the really weird thing though. The headlines are telling us that sales increased month over month, and the body of those articles are telling us the same thing. But if we look at the data set, we see that sales in August were sitting at 4,975, and in July they were sitting at 5,391, which to most people would indicate a decrease in the number of sales month over month, despite the Bank of Canada cutting rates. And the reason for this stark divergence is that the TREB is using seasonally adjusted sales data. and telling us that there was actually an increase. So the board is using some statistical techniques to adjust the data without giving us the actual numbers and statistical techniques that they used, and telling us that no, sales actually increased, and the media runs with it.
Ethics are,
But I digress. The lack of sales in Toronto comes amid a fair amount of new listings hitting the market as well, with new listings in August coming in at 12,547, the largest amount of new listings in August in Toronto, save COVID, that Toronto has seen since 2015. And then, of course, with so much inventory coming to the market, combined with the lack of sales over the past few months, Toronto now has the largest amount of active listings that it's had for the past 10 Augusts, sitting at 22,653. So this is a lot of inventory sitting on Toronto's market, giving the buyer more power than they've had over the past 10 years, which is evident when we look at the sales to new listing ratio, the SNLR, which measures the extent to which a given market is in the favor of a buyer or a seller, with the lower number indicating the market being in the favor of the buyer. Toronto's SNLR in August came in at 39.5, the lowest that it's been for the past 10 Augusts. So we have the highest number of active listings heading into the fall. We have a decade-low sales numbers. Despite what the media is telling us, the data does not look all that rosy. But for how long will that last? What about the TREB's assertion that rate cuts will lead to an increase in home buyer activity? The most recent assertion, that is, not the last dozen or so that we've covered at great length on this channel. Well, the real answer is, I have no idea, and no one else does either. Interest rates are coming down. Right now, RBC has a decent 5-year fixed conventional rate at 4.94, when around this point in time last year, it was sitting at 6.29. And as we just saw at that time, prices and sales were much higher, even with those higher interest rates. As such, if supply is so low, so tight, as so many have said, then with lower rates over the past few months, we really should be seeing sales surge higher. But we're not.
Tell me about it.
And I think that's because, as we've discussed so many times before on this channel, FOMO has been broken, and Canadians, I think, are a bit fed up with seeing headlines like this, and then headlines like this, on the exact same day. You can only act like a used car salesman for so long before the public starts to treat you like a used car salesman.
I don't think you got reason to talk to me this way.
No, I didn't mean any offense. I've actually spoken to used car dealers, and what they tell me is that there's a bit more involved in selling a car than just saying, here's a car, let's do a bidding war. Though I suppose that's going to become readily apparent for some in the near future. With all of that said, if rates do continue to come down, and it looks like they're going to, then I could see a surge in homebuyer activity come the spring of 2025. But as we just saw, with so much inventory sitting on the Toronto market, it's going to be a while before we see prices start to increase again. Even if we see a surge in homebuyer activity, all of those active listings need to get bought up before the market re-tightens and we start to see real, actual, genuine, over-ask offers. So, despite 2 rate cuts coming from the Bank of Canada, with another one baked in throughout August, we've yet to see the Toronto real estate market take off. With that said, we will continue to track that market, and if it takes off on this channel, click like and subscribe if you want to get those updates. But for now, thanks so much for watching.